Okay, so I want to say good morning to everyone. Thank you for coming in so early, especially on a Sunday morning. I didn't want to do this unless I absolutely no choice, and I think some of you actually have a makeup class this morning, starting 10 a.m. So I had to do this either in the morning or in the afternoon, and I don't think that's a good idea. But so anyway, today I have some interesting things to show you, as always. And so just to start with, so what's the biggest piece of news, or what is a major news item that some of you may have noticed from reading? I'm talking about financial markets, not because some movie star got married or got divorced or nothing like that. What's the one biggest piece of news that you have? I assume you have been reading the newspaper. This is quite possibly, again, a number one interview question. They just opened. What news story have you picked up in the last 48 hours? Sorry? Is Mandarin okay? No, go ahead, yeah. 中国央行监制下内支付机构对虚拟货币进行支持虚拟货币的交易。Okay. I've got the first part, the EVOC. Uh, but I'm going to recheck. China is kind of measured to some part, such as Bitcoin, etc. Right. Yeah. I think if you listen to, that's an interesting observation. I think the Chinese authorities are keeping a very close eye on these cryptocurrencies, and if you heard some of the videos carefully last time, actually the government is not against the concept, I don't think, but they would like to do it themselves at some point in the future. I think that's like what I said to you last time. Okay? If somebody was able to ask me, do you think something like Bitcoin or Ethereum, do you think they will ever have the recognition and status like US dollars or RMB or yen? My answer would be probably not, but for a different reason. Because if these cryptocurrencies really take off, I don't think the governments all over the world would just sit around and do nothing. I think they want to be part of the game. I think they want to be in there. So I think they would want to issue their own, and it would be a much stronger brand, if I may say so. Okay. Now, good morning. Anyway, just log on at your convenience. So I want to just pick up on a number of things that I was hoping to last time, including fiat currencies. This is just supplementary notes that I have produced at the instruction of Bobby. So I don't know if some of these may well be examinable. I know I've said that many times. I'll say it again. So in the tutorial file today, which is already online in Blackboard, there are references to his slides and notes that I have made in addition to what he taught you in class, and you can find them, for example, on investment advisory or robo investment. Good morning. There was a paper on FinTech produced by, I think it's the Financial Services Development Council or something, FSDC. I'll show you in a moment, okay? So feel free to refer to these notes. I think they may well be helpful for you for your midterm. So just by way of housekeeping, so the midterm will be, the next lecture is not Jan 17. Let me just update it quickly. So he is going to talk a little bit after your midterm on the 24th, and the next tutorial will be 27, and then after that 31st. He will talk to you a little bit. Now, if you remember, he did say that on next Wednesday, so after we have the midterm, which will be 6:30, it's going to be in YIA LT, so it is basically downstairs, okay? It's a huge room. It takes like 300 people. It's basically a cinema. So we're going to have a seating plan of some kind, just so that we know where everyone is. Otherwise, we'll never stop counting. 1, 2, 3, 4, 5. Okay. So we're going to have a seating plan. I will post that on Blackboard. So please come on time. Now, he did say that next Wednesday, he would like all the teams, or maybe some representatives, to come out. So there are 10 teams. You remember him saying that at the end. So he would like each team to send, 1 or 2 representatives to do what? To introduce your team, with your team name, who are the members, and maybe what have you learned so far from FinTech, or what do you think of it, or what are things that really interest you. So I will actually put this on paper. I will let you have it before Wednesday, but since we are here, I'll tell you now. Okay? So Bobby, he's fairly sort of free-flowing. So he said, introduce your team, what is your team name, and some of you guys have really creative team names. Your team name, who are the members, what do you think you've learned so far, and what are your interests, what do you find interesting about FinTech, what are your thoughts on this topic, and so on. Feel free, just a few minutes, okay? So he did ask for that. Just I don't know, a couple of slides would be fine, 1 or 2, doesn't have to be fancy, okay? So that would be Wednesday. And I think that's it. I want to go the update, okay? Now this is the calendar. It is, so today you guys are here, okay? And so we meet here for the midterm, and then we're going to meet 1, 2, 3, 4 more times after that, okay? Yeah. All right. Now, I thought I would share with you a story that I saw. Well, it's been headlines for financial press over the weekend, which is that the U.S. government has actually shut down. Did you know that? Do you know what it means when the government shut? First of all, why did it happen? Does anyone know why it happened? So have you all signed in? Do you know why? First, did you know? Okay, this is the headline. It just popped up. Did you know why it happened? Did you know it happened? All right. Well, you know what? You don't have to care because we're not Americans. I'm not. You might be. You might be taxpayers, but I only care because we are in global markets, and the U.S. is part of, and it's an integral part of global markets. Now, who knows why they shut down? Does anyone know the reason? So I'm trying to engage you the way a manager or a finance professional might engage you out there. They don't know why they shut down. Okay, no idea. Now, actually, there's a part that explains to you what happens now that U.S. government has shut down. Now, the government in the U.S. or everywhere, okay, the way it runs is let me just sign in. They need to, for a government to function properly, it requires regular funding for things to stay open. And the moment that funding stops, and you can't pay people, you can't pay the employees, then things will need to close, and that is what happened. You see at the top, funding ran out. So they literally ran out of money, and for new money to go into the relevant accounts, people have to sign it off, including people from the other political party, and they refuse to sign because of some bargaining between them on various political issues, like building a wall between US and Mexico and all of those things. But anyway, so every now and again, when the government needs money, and then the other party refuses to sign off on the funding approval, it is possible for a government to shut down, and this is what has happened. Okay, now what does it mean? It means that you go to the parks, national parks, they won't be open, and there are a lot of parks. I love those parks. I love the parks in the US, but I'm not there, so I don't care. Right? Probably you can't go to the library. Right? I think the police are still working. I hope. Right? And the fire and the ambulance and all that, but a lot of essential services are shut down now. Just to put a bit of perspective on this, okay, so what is a shutdown? They explain it much better. So government agencies rely on annual funding appropriations, that means funding payments that are pushed through by Congress, but lawmakers have yet to pass a full package for the current year, relying instead on stopgap, bit by bit measures called continuing resolutions. So it's now completely broken down. Now, this is not the first time it's happened. Okay, so in recent decades there were 2 shutdowns under Bill Clinton, and then another one under Barack Obama. So it has happened before, and some services are being affected. The national park and environmental protection and this and that. What does it mean for the market? Actually, you know what? Not a hell of a lot. Markets have seen this before. They're not really so worried. And in fact, in 2013, the government shut down for 16 days. That's over 2 weeks. Okay. making it the second longest since 1980. I'm giving you this background because I actually want to tell you something else in a moment. Okay. Um, and if what has gone wrong this time, well, basically politicians can't agree on various things that they are using as bargaining chips. Okay, I want this, you want that. Let's try and reach a compromise. If we can't, the government shuts down. Okay? It's amazing. It's supposed to be the most advanced economy in the world, and this happens. Um, Now, this is actually quite interesting how markets behave in recent government shutdowns, and there have been a few, as you can see. I think it's a sign of parties not being able to agree with each other. You can see under Ronald Reagan, in fact, how many times it happened. 1, 2, 3, 4, 5, 8 times. So every year he was president for 2 terms, for 8 years. So every year they had a shutdown. But look at the S&P 500 before the shutdown and after the shutdown, the week before and the week after. It practically doesn't do much. And in fact, here it actually rallied 1.7%. So if it was doing something, it was probably doing that for altogether different reasons. In other words, the market was just kind of ignoring it most of the time. This is US Treasury, 10-year, and the week before, now this is in basis points, so this is how yields are actually moving. Okay? So the week before the shutdown, it may be 26 basis points lower. If you look at this one in 1990, and the week after, it was 7 basis points lower. So that meant that if you look at this one in 1990, for example, so before the shutdown, the yields were lower, and then it went up, and then it came back down. But you can see it's mostly not so relevant. And these are kind of movements that you would expect just ordinarily with or without a shutdown. So in other words, it's not really such a big deal. Although it is a big deal if you love national parks and you go to the library regularly, or you want to go to the swimming pool. Now you can't, right? Now, this isn't what I want to focus on. There is another rather peculiar US government practice, which may be a problem. And like I said, whether you are American or not, it doesn't matter. If you are in global markets, you need to know. What do you think I might be thinking of? Would anyone have any idea? Now that one, I think people should pay some attention. So I'm saying here there may be bigger dramas coming up. Okay, now government shut down, too bad. Can't go to the swimming pool. Okay, never mind, it's wintertime. There is another sort of almost regular drama in the US, which is related to what we call the debt ceiling. Now, that is different from what I just showed you, the government shutdown. If you saw what I just showed you now, if history is any indicator, a government shutdown doesn't seem to affect markets too much. Okay, they're used to it. This is different. Okay, now what is a debt ceiling? Well, Actually, they explain that here. So the debt ceiling is a limit that the U.S. Congress imposes on how much debt the government can carry at any moment in time. When the ceiling is reached, the U.S. Treasury cannot issue any more T-bills, T-bonds, or T-notes. T-bills are the short-term, 0 to 2 years. T-bonds are 2 to 10 years. T-notes are 2 to 10 years, and T-bonds are 10 to 30 years. So it can only pay as it receives tax revenue. If the revenue is not enough, then either you pay the employees of the government, or you try to pay interest on the national debt. In other words, you try to pay coupons. And if there is not enough money, maybe you can't pay either of them. So you don't pay your police, you don't pay your firemen or ambulance. Certainly you don't pay the national park guys or the library. So don't forget those. Okay? But the point here is, if you don't pay coupons on U.S. Treasuries, technically, what is that? That is a default. Okay. Now I know it's what they call a technical default. So people, when people default, usually you think, oh, you don't have any money, so you're defaulting because you can't pay me. So this is a technical default. It's not that I can't pay you, just for operational reasons. Okay, but default is default. Okay, in the eyes of law, if you are late paying me, I haven't got my money, then I can't take my cash and spend it or put it in a bank account and generate some interest. So, that is a loss for me. So that could potentially be more serious. And that is coming up in February. Okay. What I mean by that is periodically because they are already very close to the ceiling. The ceiling means the maximum amount that you are allowed to borrow. And every time it gets close to that ceiling, they have to raise it. That's the law that they have over there. That's the practice. And if it's not raised, and then all the parties have to agree. If it's not raised, then they will run out of money. Now, this has never happened before. So, the U.S. has never defaulted on the U.S. Treasuries. But this can potentially cause a default. And the reason this is far more alarming for two reasons. Okay? One is that so we've never had a U.S. default in history before. Okay? But I think the consequence, the chaos is going to cause in the market, and the lawyers would have a picnic, and the credit default swap market on U.S. debt, okay, is going to become quite confusing. That's number one. It's going to be confusing for markets, and number two, you look at the way Donald Trump, his style and his kind of confrontational style, and the way he takes on his opponents. Okay? I think there is a very real possibility that we actually get very close to a breakdown or not being able to reach an agreement. So in February, I think they need to raise the debt ceiling. And there is a chance that they can't come to an agreement. Okay. So just try to draw that to your attention. I think it's a good talking point if you are in discussions with people in the market. Okay. Uh, Now, I just thought I'll give you some more notes. So we talked about in lecture 5. This is what I call market contagion. You know what contagion means? Contagion. Contagious means you pass it on to somebody. You are sick. Some illnesses are contagious, some are not. But when an illness is contagious, it means you pass it on to somebody. Now, market contagion is a term that people use to describe how when one asset class is suffering, sometimes it spills over to another one. And we see that quite often. And we seem to be seeing that to a limited extent last week. So the market for cryptocurrencies like Bitcoin, it has grown in stature in recent years, and it's increasingly part of the broader financial markets, and a trend that is likely to continue. Now, as the bubble grows, if you think it is a bubble, a crash has a greater chance of affecting investor behavior, sentiment about stocks, especially in the tech and the financial sector. Okay? A crash in the price of leading cryptocurrencies would almost certainly hurt shares like Nvidia. You know what they do? They make graphic cards, which is an important part of computers. And both companies have noted in their quarterly filings that cryptocurrency miners actually are an important source of demand for their products. Okay, so that would be an example of, I would say this is actually a rather direct example of market contagion. So one asset class goes down the toilet, and you try to think, okay, what else is related to that? Okay, so I'll just give you some complementary notes here. Okay. So sales of chips to cryptocurrency sources represented 6.7%, almost 7% of Nvidia's second quarter revenue of 2.2 billion. That's actually quite a bit. If your revenue suddenly drops by 7%, it will be noticeable. Okay. Sometimes market contagion, and I don't mind telling you now, okay, doesn't need to have a direct relationship. For example, so 10 years ago, in the global financial crisis, it was mostly, or when it started, it was a bubble in house prices, prime loans, and property speculation in the United States. Now, that kind of spilled over to the stock market, and then it spilled over to commodities. Bonds was probably the only, or I'm talking about government bonds, was the only asset class that actually did well, because bonds, as you might know, is what we sometimes call a defensive asset class. So when things are bad, then bond prices would go, or at least government bond prices. Okay, so corporate bonds, that's a different game, but it spilled over. So you might wonder, okay, what has the stock market got to do with properties or or even commodities. So it seems like everything went down all of a sudden. And, people in the market, they have a way to describe something like that. They say, when it feels like the end of the world and everything is going down the toilet, correlation goes to 1, is what people say. And sometimes you even get things that are entirely unrelated, and they go down, or markets that are unrelated. So the US goes down, and then the Chinese stock market and Hong Kong stock market and Japan and whatever, they all go up. Now, why is that? Okay? They may not necessarily be related. Sometimes you might wonder why does correlation always increases between asset classes when things are bad. When things are bad, okay? Why we say correlation goes to. Why is that? Well, I'll give you one possible reason. The reason is, if I am an investor, okay, and I have a portfolio and I'm making money in stocks and in commodities, but I'm losing seriously on Bitcoin, okay? I may have to sell my stocks. I may have to sell my commodities in order to pay for the losses in Bitcoin, especially if I am leveraged, right? So that would explain why every single time, practically, when there's a market crisis, everything went down the toilet. Everything goes down the toilet, except maybe government bonds. Because that's often that's what they call the, safe haven. That's what they call the safe haven, or, defensive asset class. Okay. So just a bit of market talk, which I hope you find helpful. Okay. Now, there is a paper that Bobby provided to you. I think this was actually well before Christmas, which he sent it to you guys, all of you, in an email. Do you have that paper? If you don't, I have actually uploaded it to Blackboard, and I think he may ask you some questions on this in the midterm. Financial Services Development Council, FSDC, paper 29. And I don't think you need to memorize look, someone went up to him after the class and said, do we have to read this? And he said, oh yeah, there might be some questions, but just skim through it. Skim through it, he said. So, so this actually would help you, I think, because if you look at it, would end up being beneficial for you when you start talking to someone who knows who's an employer potentially, and that you want to talk to them about fintech, because on page 6, 7, and 8, actually they give pretty good definitions of what they think fintech is. So it would just be helpful, I think, for you to read that. Just spend like 10 minutes, 15 minutes reading that part. Now, I have kind of done a brief summary on this. It doesn't mean that this is all you need to focus on, but I think these are the key parts. So on page 2, this paper, and it's not only for Hong Kong, honestly, okay? but this paper was written in Hong Kong, but I think it applies everywhere. So that the strategic focuses, you need to be focused. Okay, we're going to go in fintech. Yeah, what doing what? Okay, so they identified some key areas such as cybersecurity. So it's not all just bitcoins and cryptocurrencies. There are a lot of other things, payments. And security settlements always a big area, especially for Hong Kong and anywhere else where you have, developed and sizable financial markets. Digital IDs and KYC. Everyone knows what KYC means? You know what KYC means? Thank you. Know your client. Yeah. So this has become a big issue, I guess, in the age of, international terrorism and drug and money laundering. That you should know your client. And then wealth tech and insure tech. So Bobby talked about this quite extensively last time. Okay. The last part is what they call reg tech. Not sure what that is exactly, but you can read the booklet. So reg tech is basically the regulators trying to catch up and play their part of the game in how they interface with financial institutions, through the FinTech channels. And how they will try to streamline some of their regulatory requirements and apply a tech favor to it. Okay, so you can read that. So do you understand what these mean? I think at a minimum, you really should know what these things are. Okay? And then there are different, so here are the focuses that they identify, but there are actually different segments for this market. Commercial segments such as P2P lending. So these are all on page 8, okay? Or crowdfunding. Okay, so at a minimal, get some familiarity with what these terms are, or what these concepts are. Robo-advisory, I'll show you a bit more in a moment. Payment and settlement. So these are the different segments. So previously, I should show you the strategic focuses. Okay? Big data, and then cybersecurity, and anything which is blockchain related. Okay? So if you want to go into fintech, if you are the government, you want to drive advancements in these areas. But if you want to go into fintech as a company, you would probably choose one of these. Okay, so that's all on page 8. Now, globally, so what are the other centers doing? You'll be surprised. Actually, some governments are very proactive. Hong Kong is already lagging behind, to be honest with you. Okay? And what support the governments are issuing, and especially Chinese government. Okay? They are right up the curve on this game. And on page 17, you'd find some coverage on that. Okay, and then Hong Kong as a fintech center. So what are the strengths, and what are some challenges, and what strategy do they recommend? Things like that. Okay, so this is how I would read it. Now, I want to just say a few more things. This is supplementing lecture number 5. And on page 31, this is my reference point. What's page 31 of lecture 5? By the way, there is another, when you have a chance, there is another paper that this entity has produced, FSDC. It's a paper on DLT. You might want to read that later. That's paper number 30. But that's not what we will talk about for the midterm, just for your interest. Okay? So you will get a good understanding of what DLT is. If I was young like you, I would seriously think of going into fintech. I find it fascinating. Now, so lecture number 5. Let me just want to show you that page. Okay, so page 31. This is the page on asset management, and so some banks incumbent means banks that are currently in the market, and e-commerce institutions continue to reinvent themselves using live market insights and feedback to develop new products, but new business models. And others are applying social data analytics to identify investment opportunities. Of course, that's potentially you intrude on people's privacy, and that is a big issue for modern times. But what I was going to show you, I have made some more notes. So by 2008, well, we are already 2018. So Asia Pacific is going to be the largest wealth management market with 61 trillion in assets, bigger than either the US or Europe, and growing at 3 times the rate the rest of the world. I think I have said this before, I will say it again. You are born in the right place at the right time. This is not the kind of statistic you will see even 5 years ago. Much of the, or perhaps even most of the wealth creation, okay, is now happening in this part of the world. Wealth creation, what's wealth creation? You work, you make products, you sell products to other countries, they pay you money, you create wealth. A lot of that is really happening in Asia relative to the US or Europe. And as a result, expect the asset management market to keep growing as it has. Okay, so by 2030, in 12 years' time, by the time when you guys, when your career would be at its peak, and you will all become managers, so wealth in China alone will be similar to that of US today. But that growth bonanza means these opportunities. So these growth opportunities will not necessarily just benefit the current participants, like the current banks or investment managers. Okay? So each element of the wealth management feeding chain is disrupted, for good, for better or worse, disrupted by new technologies. And Bitcoin is one example. I'll show you another one in a moment, okay? Driving the sector's transformation, and it's really happening very quickly. I think next year when we run this course, a lot of the content would be different. So the winners will be existing institutions and also new players, and you saw some of them last time in the videos, like Nutmeg, who harness the technologies most effectively. Okay. So now this is on that company. Now I find that company actually quite interesting, and when I first saw that, it's a little bit like, the feeling I had was, how sometimes you walk into a boutique or department store and you see a dress or a jacket and say, oh, wow, that looks so nice, okay? And before you see it, you didn't think that something like that could be available, but when you see it, you say, oh, yeah, this is exactly what I need, okay? That's the feeling I had when I saw that. I thought, yes, there's a gap in the market, and these guys have identified that gap. And with the advancement of technologies, it is now becoming a reality. Now, so this is referencing page 42. So the last one was 31. This one was 42. So I'm just giving you some additional notes on that. On nutmeg, I thought it was earlier than that. No, it's more like 36. Why did I say 42? So the idea of this company is you actually can choose according to your risk preferences what kind of risk and return you are aiming for, and maybe even what asset class, and they would tailor-make something which is driven primarily by investments in exchange-traded funds or ETFs. Okay. I think there will be copycats later on. So now, first of all, please understand the word discretionary. Discretionary investment management. Discretionary means somebody is making a decision for you to do something or not do something. That's discretionary. Okay. More on that in a moment. Rather than just giving you a platform to trade on. And they invest in listed securities, debt, cash, commodities, and primarily, but not always, via ETFs. Okay. And they provide a kind of alternative to stockbrokers when customers will make their own decisions. Okay. So I keep shifting this thing. Just want to know the time. So they provide investors with online access to investment management, taking the inspiration from the tech world rather than the financial sectors. I just wonder, the future customers, how many of them really know much about, stocks or bonds or commodities investments? So there is potential for, if you get a market meltdown, potential for mis-selling and complaints. Now, I want to talk to you a bit about robo-advisors. But before I do that, I want to just go back to the tutorial for last week. There were just a couple of quick points I want to share with you on the last two, on fiat currencies. I meant to talk to you about that part. And now the term fiat, there is an Italian car maker called Fiat. It's got nothing to do with that, okay? So fiat currencies just means essentially paper money that's in your pocket. Now, so that is a currency which chemically, it is just paper. There's nothing different between the paper that is in your wallet and the paper that I have here, okay? But it's given some value. This is how, there's nothing sacred about that piece of paper in your pocket. That's my attitude. You know what sacred means? How do you say that in 普通话? Yeah. For me, there is nothing sacred. It's not because I'm rich, okay? It's not. It's just the way I see it. It's just a piece of paper. And it took me a long time intellectually to come around and think of money that way. And it has value because the government says it has, and I guess it's a sign of how civilized we are as modern human beings. So the word, the term fiat derives from the Latin word fiat, which means let it be done, in the sense of an order or decree. Okay? Decree, sorry. And it was an alternative to commodity money like gold or silver, and has been used as a medium of exchange. And representative money is another concept. It's similar to fiat money, but it represents a claim on a commodity. So if you have a coupon that will allow you to go into Pizza Hut and get a free pizza, and they would honor that, I guess that is kind of representative money because it has some value, okay? Which can be redeemed to a greater or lesser extent. So this is, I guess, pretty simple. Okay, so China was the first country, but it really, so fiat money really came to prominence, I guess, only in the last couple of hundred years. And there was even a time when we had something called the gold standard. Now, do you all know what the gold standard? Do you know what that is? As students of finance and soon to be professionals, I think it is good that you know some of the financial history, because if you know that, then you understand the origins of modern monetary policies and how it's developed over the years. The gold standard was something that countries, and many of them, including countries in Europe, Japan, and United States, so they came to an agreement in the summer of 1944 in a place called Bretton Woods, which is a little town outside of New York. And the agreement was that all those countries who are in that agreement, and there are many of them, okay, they would only print money according to how much gold they have in their reserves. In other words, they would not just print and print and print without any limits. Now, if you're an economist, you can write PhD thesis and discuss all year whether this is good or bad, but this is what they did. And you may not, or you may be aware that the Hong Kong dollars in your pocket, actually in Hong Kong, the government has made a pledge that the amount of currencies, Hong Kong dollars, okay, that are in circulation have to be linked to the amount of foreign currency reserves, principally US dollars, okay, that are actually in Hong Kong. So Hong Kong dollar, you could argue, is still running some kind of a gold standard, the way we were doing. Okay, it may well be the only place in the world which is still doing that, by the way. Okay, so that was a gold standard, but they actually abandoned that. And you have Richard Nixon to thank for that. He was the president. So in 1971, he decided, okay, to hell with this. We just want to print as much as we can. And they said, okay, we're leaving the gold standard. And they have not looked back since. Okay? I think part of that could be they were because they were fighting the Vietnam War and it was so expensive. They really needed, they needed more money. And now you can't keep printing and printing and printing, especially if you are like Zimbabwe. Okay, if you are the United States and everybody needs dollars, it's a little different, but still, at the end of the day, you can't keep printing. But anyway, this is what they did. Okay. Now, for Tulipmania, I just want to mention, because this point was, I think Bobby mentioned it verbally, or one of the videos. I want to put it down in note form. What are the three similarities between the Tulipmania and cryptocurrencies? Do you remember? Does anyone remember? No? Yes? What if there was a question on Wednesday? It would be a disaster for you guys. Huh? 1, parabolic price rise. You know what parabolic means? A parabola. This is a parabola. Okay? Parabolic price rise. So you can see, or it's not doing this, it's doing that. Okay? So that's parabolic. Second, so futures contracts became extensively, accessible, and there was a lot of excitement in the general investment community, which may have nothing to do with tulips whatsoever. Okay, people were just out there for a quick buck. And then turbulent and rather erratic means just unstable. Speculative fervor. Fervor is another word for excitement. Kind of like fever, but it's not fever. Okay. Fervor. Do you remember him mentioning these things? Yeah, he did in the class. Okay. So I just want to I just want to mention that part. Okay. And now I'm going to spend the next 15, 20 minutes talking about, let me shut that down. Don't save. I'm going to spend a little time talking about financial advisors and robo advisors. Always reminds me, every time I see the term robo advisors, it reminds me of RoboCop. Have you seen that movie? It's got nothing to do with that, but RoboCop was a hit movie that came out a few years. It's actually quite entertaining. I don't know who's actually seen this movie. Anyone? It's just 90 minutes of entertainment. But anyway, we're not talking about RoboCop. Okay, we're talking about robo advisors. Now, before I actually tell you a bit about robo advisors and what they can do, I thought it's appropriate at least to talk about the non-robo version which is to say what investment advisors were doing like 10, 20 years ago when all this technology was not here. Okay, so unless you know that, okay, you don't know what is actually being replaced. So I'm going to start by telling you. So there are, different ways to play a game. So if you've got $1 million, what are some of the things that you can do in terms of protecting and growing your wealth if you are an investor, okay, you are a customer. Well, you could just do it yourself, as some people do. You could give it to a hedge fund. What else? You could give it to a mutual fund. Now, when you do that, there are various ways. So you could give it to, let's say, an equity fund. So you can go to Fidelity and then emerging market equity fund or European growth opportunity fund, whatever they're called. Okay, you could do a manual allocation yourself. So what that means is, so you got $1 million and you put 60% in a stock fund and maybe, let's say, 25% in a bond fund. So you make that decision, and 15% in a money market fund or something like that. Okay, so you can do that. Probably not a decision you want to change every month because they charge fees and it's not that efficient. And you see in a moment why I mentioned this point. Or you could even put your money in what's called a balanced fund. A balanced fund, do you know what a balanced fund is? Does anyone know what a balanced fund is? Faye, you know what a balanced fund is? Almost. So most big portfolio managers would have either a balanced fund or certain balanced funds. So that means in a balanced fund, if you put money in that fund, it already has some equity and some bonds and maybe some money market and currencies and so on. So you can do that. So they make the asset allocation decision for you. Okay? So mutual funds, you can do that. Or maybe you don't trust asset managers. You say, to hell with it, I'm just going to be at market. I just want to invest in CSI 300 or S&P 500 or the Hang Seng, FTSE, whatever. I'm just going to buy index funds and ETFs. Okay. Now, the last one is the one that I draw your attention to. So I mention all these because you need to know there are a lot of different ways you can manage your money. But we are kind of referring to the last one, the wealth advisors. What do they do? Okay. Now there are different types. Okay, first of all, there's the broker dealer type. So they are paid a commission when you trade based on their advice. This is not, for this morning anyway, this is not our focus. Okay, our focus is the second one, which is called registered investment advisors. So they have these in the US, we have them in Hong Kong. You have that in China? Do you? A licensed investment advisor, do they have that in China? No? Never heard of it. Can you imagine 1.5 billion people, what opportunities there are if they don't. So in developed countries, it is a common profession. But after what I'm going to show you, okay, I am not sure whether you want to follow this career path. You see what I mean in a moment, okay? But I'm still showing you the non-robo part, okay? Next, I'll come to the robo part, okay? So an RIA, okay? So they are not paid for selling you products, so they get a fixed annual fee for giving you advice. So typically, look, there's a wide range, who knows, okay? Anywhere from 75 basis points to 1.5%. So some actually charge more. Some even charge you hourly, right? If they are that good, right? If you think you are good at giving investment advice, why not try it? Think of this as a potential career, okay? Except for what I'm about to show you in a moment, okay? So it's actually the second type that I want to spend some time on, the RIA, or Registered Investment Advisors, okay? Don't worry that you may or may not have this in China. In the future, I am sure, that would become a. Does anyone know whether there's such a thing in China? I'm sure a lot of people give advice, okay? It's just they may not be registered or licensed, or you have to take exams. Does anyone know? No? All right. So there are strict, so you know all that from CFA, okay? And you're supposed to have clients' interest as a priority. Now, even in terms of, even within investment advisory, there are two different types of clients. So there are what they call self-directed. So that means you just give me advice, and whether I take it or not, it's up to me. Okay, but I welcome your advice, and I have an open mind, and I'm glad to hear it. Okay. The second type is what we call deputized. So you are my advisor, and I give you authority to execute trades and manage my portfolio. Now, either of these, so they charge a fixed fee. Okay. Now I come to robo-cops, right? Robo-advisors, sorry. Now I make some references to lecture 5, page 44. So what was that? Page 44. Page 44. No, 42, sorry. Okay, so we started talking about automated advisory, basically, okay? So that is any automated investment platform that is using technology for lower account minimums and lower fees. And so typically it's based on a questionnaire. And so the way they try to differentiate themselves is, you can have 24-hour automated support, although you might be talking to a robot, okay? But you do still have access to a human if you want to. Most of us would like to have that human touch in the end. There's also robo-retirement. It's robo-everything, robo-this, robo-that, for people who want to plan for retirement. Now, I think these you can read by yourself. So one key difference related to what you saw earlier is that because of the automated nature of these platforms, it allows you to trade much more frequently. If you allocate 60% to stocks and 25% to bonds to a fund manager, I don't think you can change it every week. Okay, with some of these platforms, potentially you can, and they will charge a much lower fee. I think these you can just read it yourself. Okay, so the US is actually quite advanced on that. So 57% of global deals on robo-advisory went to the United States. Now, the two largest robo-advisor deals outside the US went to Huatai, a robo-advisor and personal wealth management technology based in China. So they issue some fundraising bonds, I think. Okay, so just for your interest, so you can read this yourself. In the US, there are a number of robo-advisors, and outside of US also things are starting up. Okay, so Germany actually had the most, that means the largest number of private active robo-advisor companies outside of the US. Okay, now I want to just give you a demo. So how is this likely to impact the traditional advisory landscape? Well, I can think of a number of things. So first of all, it's going to be a lot more accessible for the little guy out there, and at any time, 3 a.m. in the morning. It's really created for scale. So what I mean is it can handle a lot of customers, even for smaller sizes, which previously you couldn't do when it was done manually. Okay, I think potentially it allows for much more frequent trading and flexibility and adjustments. Okay, I think it would be easier to produce what I call an audit trail. That means it's easier to track what you are doing step by step, because everything will be recorded. Okay, so you can't say, "Oh, I didn't want to do this." They can say, "Well, no, in your risk appetite, this is what you specified." Okay, and substantially lower costs. Okay, now there may well be others, but these are the ones I can think of for now. Okay, now let me just show you, just give you a demo, okay, of some of these platforms that I was playing around with in the last few days. And so there's one called Wealthfront and Betterment or Wealth Simple. There is nothing, ladies and gentlemen, to stop you guys thinking about starting something like this or becoming a registered investment advisor. Although, like I said, honestly, I am not sure whether that is a good career path to go into, given what I'm about to show you. Okay, now you can go home and this website is called nerdwallet.com. I want to show you one. There are a lot you can play around with, but the one I want to show you, which I thought was pretty cool, is called Motif. Okay, and if you look at Bobby's notes carefully, it is actually hanging around here somewhere. He did mention Motif being, I don't know where it is, but he mentioned Motif being one of the active participants. And so keep in mind, the Motif must be, oh yeah, it's on the bottom left-hand corner, okay? Now just keep in mind, one of the reasons I want to show you is when you plan your career, okay, do you want to become an investment advisor or do you want to become a robo advisor? In other words, be the people behind that company. Okay, so here is an example. So this is Motif, and so what you do, so it's very pretty. So individual investor, so you open an account. I'm just going to say thematic. You can play around with this all day. Okay, so I'm just going to say thematic portfolio. No. Let me go back. So open an account. So how would you like to invest? So there are different ways. So you can have a trading account or impact account. So if you have some kind of social awareness, that it's kind of like the robo version of Islamic investing. So they don't invest in pork or gambling or whatever else. So you might have similar value. So I'm investing for a home purchase in 5 years. I want to say $10 million. How about that? Okay. I don't know what it's going to go crazy. I think my risk tolerance is high. Okay. If I can save $10 million in 5 years, I'll be very happy. Anyway, just go home and play around with it. So next, what do you care about? So do you care about sustainable planet? In which case you might invest in some of those, solar power or renewable energies, and you will get away from the coal mining and stuff like that. Okay, so let's say I choose this, and you go next. Here is your personalized investment plan. So US stocks, 18%, developed countries, 9.5%, emerging countries, 8.4%, US real estate stocks, 6.3%. And if you click on any of these, I think they even show you what stocks they are actually recommending. Okay, so 3M, can you see? 3M, Alphabet, Amazon, Amgen. Now, there are 1,000 different ways you can play this. If you own the platform, okay. So these can change every week, maybe, okay. Or you can dynamically rebalance. So you have the same portion of stocks and bonds every month, let's say. Okay, so when the value of your stocks go up, you may sell a little bit. There are a lot of portfolio management subtleties that can apply. So I think a platform like that, apart from the fancy technology behind it, okay, there should be there should be, a great deal of solid portfolio theory behind it. I hope they're not just making bullshit recommendations like this. Okay, it may even be optimized. That to me would be the value. So, even things that maybe you learn in investment portfolio analysis, I think even those things ought to be applicable. Okay. Hello. But just keep in mind what I said to you earlier. If ever you are thinking to become an investment advisor, okay, please be aware that this is happening. Okay? Is it interesting? It fascinates me. Emerging country stocks, what do they recommend? Alibaba, okay, I see that. American Mobile, Anglo Go Ashanti. I do see a lot of these Chinese stocks are in there. China Life, China Mobile, China Petroleum, Chonghua, Sino. Yeah. All right. I think some of you guys answered my questions. I'd like you to do a scan on the participation log, please. I think Lin Yin and Tan seems, yeah. And then Fei, and you are, yeah, you are, yes. So 1, 2, 3, 4. So I'm going to show you the participation log. Okay, so please do a scan on that. Okay. I forgot to bring the hard copy today. Okay, is everyone okay? So you're all right on the midterm? It's not going to be hard. I want to thank you for coming in so early on a Sunday morning. I do appreciate that. Okay, has everyone signed in? Yeah, you have. Okay, I actually I made a record of this tutorial. I might put it online. If you want to review it further, feel free to do so.